Now, ICRA has come out with a report saying that they expect a decline in domestic sugar production by about 5% for this sugar season. But this is not going to have a very big impact on realization of domestic sugar companies. To talk to us about this report, we are joined by Sabyasachi Majumdar. He is Senior Vice President and Co-Head Corporate Sector Ratings at ICRA. He is joining us on the phone line from Gurgaon. Mr. Majumdar, thank you so much for speaking with us at NDTV Profit. Now, because of the patchy rainfall, especially in Vidarbha and Maharashtra areas, there is an expectation that sugar output would be lower. Your estimate is 5% lower, right? Yeah. What are the areas that will see a big fall in the sugar production?
See, essentially the decline that we are expecting would be mainly coming from Maharashtra and adjoining parts of Karnataka. So we expect the sugar production overall to be down by 5% or so, anywhere between 5 to 10%. But at the same time, since sugar is a fairly long duration crop, clearer estimate will emerge as and when this season progresses.
Right, but Mr. Majumdar, you're saying despite the sugar crop being lower, production being lower by 5%, there isn't going to be a substantial change in the kind of realization sugar companies can expect. Why?
Basically there's in spite of this 26, the production coming down, still we expect it will be higher than the domestic sugar consumption. So overall the surplus will continue, and there's also the overhang of the last, opening sugar stock itself is very high. And many of the sugar mills are quite stretched in terms of liquidity. So that could keep prices under some pressure. And although the government proposes to release some of this pressure on the stock by compulsory 4 million tons of exports, what would happen is that while the domestic realizations may go up for the mills, with domestic prices going up, that will also be counterbalanced by the fact that about 15% of the production for next year will go out as export sales with relatively modest realizations. So if you are looking on a weighted average basis of export and domestic realizations, we feel that the realization growth may not be very high. And from the perspective of the sugar companies, it will be quite important as to how the cane prices are determined for the next season, including what subsidies that the state governments and the central government could offer to these sugar mills.
What does this mean for the financials of sugar companies? Many of them have been stretched, but many of them, a couple of them that we spoke with, also held out to some hope that maybe not this sugar season, but next sugar season, they'll be able to clear up their losses. Profitability may come later, but at least they may be looking at a break even. Do you think this is possible, or do you think there is significant drag on their cash flows and that will even remain next year?
Yeah, so basically what will happen is that we expect that overall realizations will go up slightly, which would help the sugar mills as a whole, because we don't really expect, given the profitability position that, cane prices, net of whatever subsidies are given would go up. So overall, we do see some improvement in the profitability of sugar mills. And this export of sugar, while it may not help much from the profitability perspective, it will at least, improve the cash flows and the debt position of sugar mills. Mm-hmm. So, recovery in terms of, the sector becoming profitable may follow with a lag, but we do see some, relief at least on the cash flow position for sugar mills.
But what about the cane arrears? Cane arrears, according to your report, are about 14,000 crores on August 2015.
Yes.
Do you think, given that you said there's an improvement in the cash position, you are expecting an improvement in cash position of the companies, will there be more pressure to, clear these arrears? Is there any relief coming up for the farmers, because they keep getting promised higher prices for their cane, but the arrears just keep adding up. They never really realize them.
Yes, that is true. If you look at, for example, UP, there the actual cane price is 280 rupees before accounting for the subsidy. And even if you take into account, let's say, the 29 rupee subsidy that the government has announced, the net cane price is about 251 rupee per quintal, and adjusted for a recovery rate of 9.5% or so, overall the cost of sugar production is still in excess of about 30 rupees or so. Whereas even with the realizations having improved, they're still at about 27.5 rupees per kg level. So clearly there's still a mismatch between the cane prices and the sugar prices that mills are getting, particularly in states where there's a state-advised price in force.